Hello and Happy New Year. My name is Melissa Galasso. Welcome to the Genuine Learning blog. As we kick off 2025, one of the first things we wanted to do is review what happened in 2024. Today we're going to look at what was issued during 2024, just to kind of give an overview of those final standards that came out from various standard setters, including the AICPA, the FASB, and the GASB. Interestingly, this is probably one of the shortest number of new standards issued in a given year. And as long as I can remember, quite honestly. So it's kind of exciting to see sort of a change of pace in some standard setting, and also a recognition that we've got some big things that are coming down the pike, and that we don't really need to rock the boat too much. So first off, we are starting with the FASB, and honestly, in what is a historical year, they only issued 4 ASUs. Mind you, they have done well over 20 in a given year, so 4 is a pretty interesting year. And given that they are pretty niche topics, it's very much a year of transition. So the first ASU 2024-01, came out. This actually started as a PCC alternative, but was transferred back to the FASB when we realized that actually public companies also have profits interest. And so while this standard doesn't provide a ton of guidance around profits interest, it provides really nice examples of how to apply the existing information so that you can determine, is it under 710 or 718? So really nice standard in terms of application. ASU 2024-02 isn't going to have a big impact on you, but does make some clerical changes to the codification by removing reference to concept statements, because remember, the concept statements are not authoritative. So they are the theory that underlies GAAP, but are not GAAP themselves. And so this is just basically a clerical cleanup. ASU 2024-03 came out much later in the year. However, it only impacts public business entities. So this standard, often referred to as DICE, disaggregation of income statement expenses, is going to focus on taking things like selling general administrative expenses and requiring things to be broken out and provide a little bit more presentation and disclosure about various items, particularly cost of goods sold, another one that gets a lot of attention. However, this does not impact private companies or not-for-profit organizations. So just public business entities are in the scope of that one. So definitely important for them, because this is going to be a big change. However, for a lot of the people who listen to this blog, not going to see a lot there. And then our last ASU is really very niche. ASU 2024-04, induced conversions of convertible debt instruments. This really looked at a gap in practice where we saw some changes in the economics and how certain transactions were being handled, and we didn't have really great guidance. And so this sort of makes a little bit of an update and provides a little bit more clear guidance on when you have an induced conversion versus an extinguishment. So again, not a ton going on here. I would like to point out, just because I think it's important, that in very, very early January, I think it was like the 2nd or 3rd, we were still closed. So it was definitely early in January. The FASB did issue an invitation to comment on their agenda consultation. So similar to what they did a few years ago, they're looking to figure out what should be on their next set of changes to GAAP. And so if you're interested, we have a pretty long time before that is due, but you can give feedback to the FASB on what you'd like to see as future ASUs. All right, let's move on now to the GASB. The GASB here also had a few standards that were issued. This is not the smallest that they've ever had, but they're 2 very interesting standards. So GASB 103, which is the financial reporting model, that was something we've talked about for a long time. This started as a invitation to comment, followed by a preliminary views document, followed by an exposure draft, and ultimately the largest portion of changes were not included in the final standard. So no changes to our governmental funds, which was really the big change. They were going to move away from the current financial resource measurement focus to something called a short-term financial resource measurement focus. And ultimately, we decided that the cost of change was not going to make sense with the benefits. And so Ultimately, this is a pretty narrow standard that just looks at certain changes within proprietary funds, MD&A, how we present certain budget to actual variances, etc. So it's a great standard, but it's just much smaller than we've ever talked about. So if you've been in one of my classes in the past and we talked about the big financial reporting model changes, note that this is a much more scaled back standard. And then GASB 104 really clarified something that was very confusing. Over the last few years with PPP and leases and SPIDA, we've seen a new type of asset, right? So we've seen these sort of right of use when we think about sort of leases, and we think about the SPIDA, subscription-based IT arrangement assets, and we see these PPP assets, and how do they interact with the disclosure requirements for capital assets? And so they gave a nice little clarification here, helping us to understand and actually expand the disclosure requirements in this area. So that standard came out later in the year, and the GASB is not done. They have quite a few things still coming down the pike there as well. On the AICPA side of the house, we did not have any SARs. They did put out a proposal with a comment letter due date at the end of the year. So we'll probably see a SARs come out relatively soon in 2025 with respect to CAS engagements and whether they should be under the preparation standards or under the consulting standards. So that is going to be a big deal, obviously, with quality management. We didn't have any audit standards, and that, again, is not a surprise because really this year is the time for auditors to be focusing on quality management. So we've got we have SQMS 1 and 2 and 3. We also have our SAS 146, SARS 26, but what was missing was the SSAE. So SSAE 23 adds to the body of knowledge around quality management to provide consistency with the QM standard. So again, this is going to update the requirements around quality management, around sort of the specifically engagement level requirements for quality. So not going to be a gigantic change, but it is a nice clarification and consistency change here. But no SASs, focus on your quality management. No SARs, focus on your quality management. And the only SSAE reminds us to focus on our quality management. So hopefully you can see the theme there for the audit and the assurance side of the house. Let's close up here with the ethics side of the house. We did get one ethics standard. I do expect another one that should come right behind it early in 25. But this one is around employee or executive recruiting. And this is something that we've seen a growth area, right? A lot of times a client will say, you know what, we're hiring a CFO and we don't know what a good CFO looks like, right? That's not really our area of expertise. Hey, you have to work with them. Can you help us find our next CFO or our next finance director? And the problem here is obviously an independence consideration. So you can't, for example, under the standard say, hey, I want you to pick this person to be your next CFO. So they go through a little bit more detail about what we can and cannot do for key positions versus non-key positions with respect to employee or executive recruiting. So a nice little update there for independence considerations. So definitely something to take a look at. All right, so as I said, 2024 was short and sweet and to the point, and many of you have a lot going on. If you are an auditor or you work in the assurance world, quality management is a real thing. It's something that firms really have to dive in deep and do a lot of work around. And so we're going to give you the space that you need to do that. And then for those of you who do financial reporting, you've survived RevRec and leases and CECL, although we are expecting a CECL change in the first quarter of this year. So we shall see. That comes from the Private Company Council, or the PCC. So stay tuned. So we're not done. This is not like the end where we don't have anything else to work on, but it is definitely going to be a nice year for implementation going forward. So thank you guys so much for joining us. We wish you a wonderful 2025. We hope you continue to enjoy our Genuine Learning blog and you tune in each week to see what's going on in the world of A&A and the CPA profession. Thank you, and I hope to see you on a future blog. Bye, guys.